Hello and welcome to another edition of Real Day Trading. I hope everyone had a great weekend. As you could see on the 5K challenge, we made around $200 today, so up 25%. This is now the $125 to 10K challenge. We are holding a NVIDIA call debit spread 245 to 260, a crowd CDS 195 to 205. I was between that and Upstart, and I chose crowd because it has a much wider ATR and a better chance, I believe, of quickly getting above that short strike. And then I hedged us with two VIX calls. Best case scenario, tomorrow we open with a gap down, allowing me to take profit on the VIX calls. Then we rebound with NVIDIA and crowd, ending the day at very least between their strikes. That puts us in a position to capture the $1,500 that we can get from NVIDIA, $1,000 we can get from crowd, plus the potentially, let's say, $400 we'll get from VIX, puts us around $2,800, $2,900 by the end of the week. As I said before, we're going to do this one now differently than before, where we will let our positions, dependent on the market, grow into their maximum profit, right? So there won't be so much mixing and matching and changing. Obviously, as we get more money, we'll have a lot more flexibility, but even when that happens, I think you'll see that the strategy will be somewhat different than it was before. Let's now take a look at the market for a second. Now you can look here at the daily, and it's starting to look a little bit better, right? You have a nice long green bar followed up by another one. Today looks like didn't really go anywhere. Some people look at this and say, oh, this is a bull flag on the daily. Others will look at the extreme chop here on the 5-minute chart and think, well, we got a head and shoulders forming. Let me tell you something. Right off the bat, I'm going to throw it out there. This market doesn't give a shit about your patterns. It doesn't. You can go and look at this all day long. Oh, it's a death cross with a hanging this and I mean, honestly, you have one piece of news come out. U.S. says that, oh, more sanctions are coming, or we might not sanction, or I don't know, Putin sneezed and now he thinks he has COVID. I mean, all of those things could take this market way up, way down. I mean, look at this. This is extreme chop. Extreme. It's not just chop. Chop is, you stay in a tight range, but you're chopping around. You wind up pretty much where you started. Here, we really wound up pretty much where we ended off on Friday. But look at the ride it took us on. Now, this is what happens. You buy a position here. Oh, I'm long, I don't know, let's say Tesla. Going great, going great. Oh, shit. No. Oh, there it goes. Damn it. All right, I'm out. Oh, thank God I got out of Tesla down here. Oh, look at that. And then, son of a, damn it, I should have stayed. Right? When you are in extreme chop like this, just imagine that you're standing there and someone's running in a circle, right? And you try to get their attention and they ran past you. Guess what? They're going to come back around again. This market will come back around again. If you're long and you get long over here and then this happens, guess what? It's going to come back around again. Just wait it out. You're short, you got short here, it popped back up. You really think that it's all up from here on out? That's it. The market's not going to look back. We're just going to skyrocket. Of course not. And let me also just throw something else out there. For people panic selling because of the threat of a nuclear war, what the hell is wrong with you? Okay, worst case scenario, there's a nuclear war. Do your investments in Coke matter anymore? You're pretty much skinning a squirrel to survive at this point, and I don't think Ameritrade's answering the phone. Everyone's panic selling when the worst case scenario is Armageddon. That's ridiculous. Absolutely ridiculous. So I just wanted to get that out of the way. I saw so many headlines that, oh, Putin goes to nuclear alert and futures drop 500 points. That's just moronic. Okay, that rant's over. Kind of. I'll probably go back to it. But anyway. What you should do in these markets, now, conventional wisdom is going to be like, you need to sit out, right? Particularly if you're a new or struggling trader, sit out, sit on your hands. And if you can't day trade, this is a great market to day trade, by the way. Great market to day trade. I had a lot of really, really good wins today on the day trading side. But if you can't day trade and you can only swing, everyone's going to tell you, sit on your hands, be in cash, wait on the sidelines, wait for support. Now, I'll be honest, that's the best advice. It really is. But let's also be honest. None of you are following that advice. I know that. Right? Because one, who the hell knows how long you're going to be on the sidelines for? This thing is not going to be over tomorrow. And then you have the Fed this week coming up. That's going to cause volatility. Inflation's causing volatility. And then conflict, energy prices. How long are you going to sit on your hands for? Well, conservative approach would say this is a great time to paper trade, great time to watch pros trade, see how they do it. And again, I advocate for that and have been advocating for that. But for those of you that can't sit on your hands, because in this market, I'll admit, even the most FOMO immune trader can get a little jumpy when they start seeing some of these huge moves. You'll be sitting there, sitting on your hands and want to get in on it. Every people posting, oh, made $12 on Tesla, made $14 on Google. You're going to be like, I'm sitting here doing nothing, right? Okay. So you want to get in. Well, first, the types of stocks you want to get in on are stocks like this. DVN, right? One, the sector is hot, obviously. Oil and gas, clearly a hot sector. Two, this thing is at an all-time high. Best time to buy a stock. All-time high. Nobody up here. Nobody bag holding here. No reason to sell. And as you could see, even though the market was a roller coaster, this couple of dips here, but basically at worst case, it consolidated. And if not, it was going up. That is a strong long. You can look here at, let me just bring up, oh, sorry, that was like, there's no volume on that. Here, this is a good stock to short, right? Look at this daily chart. That's pretty damn bearish right there. It is broken through pretty strong horizontal support here. I mean, look at that. Could not break through it here. Could not break through it here. But here, it broke through and closed below it. This is really strong horizontal support. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9 touches on that thing. That sounded wrong. Show me on the doll. Show me. 9 touches on this line. But today it broke through. That's a really bearish sign. That's a great stock to be short. So you want stocks like that if you're going to jump into this market right off the bat. This is really a relatively weak stock. The other one's a relatively strong stock. Right? You got both ways, and this is a case where you can go short one, long the other, and they can both pay off. One will be going down while the other's going up. If the market is going up, then your long is going to go up even stronger and vice versa. But here's a chance where you can go market independent, right? But if, for example, you're going to jump into, I don't know, let's say you're going to jump into a stock like NVIDIA. And that's a bad print, obviously. You jump into NVIDIA and you're over here, let's say at 245, you're all happy. Everything's great. NVIDIA's going up. And then, bam, all of a sudden you're at 237, $8 it dropped. Now you're like, I'm going to close this for a loss. The trick to these choppy markets, they're going to come back around again. And look, here comes NVIDIA back up again, 243. It's the definition of chop. Do not get shaken out unless you see some clear and major violation of a technical line of support or resistance, particularly on the daily chart. Did NVIDIA go below 231 here? Because that's the 200 SMA. No. No, it did not. Okay. Well, then it's going to come back around. Rely and have faith in your daily charts, because that is the only thing that's going to provide some stability. And do not overcomplicate it. You're looking for major lines of support and resistance here. When you're in a news-driven environment, you can just take all your indicators and your patterns and all that other crap and just toss them aside for right now. Because the news is going to dictate where you're going, right? And by the way, an example of my favorite indicator of all time is take something like, you could take something like DVN, right? And DVN is at an all-time high. It's going up. Everything looks good on it. However, if you look at indicators like, I don't know, RSI, you start seeing that stocks like that, you're getting told that stocks like that are over. Here, let's put it up here. Overbought. This is going to kill me even to put this damn thing on here, but here we are. RSI here, and put it on over here. RSI there. Okay. All right. Look at this. This thing has been in overbought territory all the way since, I don't know, all the way back here, over 70. Look at this. Overbought, 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 overbought. And it still goes up, 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 up. And right now it looks like it's heading back up again to overbought territory. You do not want to look at these indicators right now. Look at relative strength. Look at relative weakness. Look at relative volume. Look at your daily charts. Leave the rest of, let me get this crap off my screen, by the way. This disgusting. Okay. That is a nice chart. RSI can go to hell. All right. What else do we have? I'm not going to go over trade by trade detail here, except to say that in today's market, I did a couple of trades that might be of interest to you. Let's see here. Microsoft, I took in profit now, very well. Here's a great example. Here's Microsoft. Okay. So I bought Microsoft at 8.33, so 11.33, right? See here, right there. Microsoft is at 297. And then what happened? Market decided, didn't like the news, and down, down, down it went, right? Okay, at one point, my $12 option was worth around $9 down here. But held on, up it goes, and now I'm in profit about $1 a contract on that so far. I'm holding it. Why? The stock, very strong relative strength, and then finishes now above its 200. That's the type of finish I was looking for, that this stock could get above its 200 SMA. If you notice, I gave it right until the very end. And the 200 is 298.22. It broke through literally on the second to last, on the last candle. It broke through on the last candle. So was not giving up on this trade. Now this trade is profitable. Another one I did, I shorted here Citibank right there, and I shorted it at, let's see here, 850 at 59.64. So right there is when I shorted it, and then I bought it back at 11.14, which would have been right there, almost at the bottom. Took $1. Great short. And if you could see, correspondingly weak daily chart. Good day trade. Take $1 a share on a stock like that. Now for me, I'm taking, 2,500 shares here, 3,000 shares shorting. So $1, okay, well that's a pretty good return, but it's all proportional to your account. What really matters here is taking $1 off of a stock like that is taking like 0.25% of the total stock price. That is a good return on a trade. Another trade I got to admit, I did get a little swept up here and took Mara. Felt Mara was breaking out a little bit down here. There's no real algo line. There's some horizontal resistance here that it seems to have broken through, both levels here. Maybe it kind of clips it here, but I don't particularly like owning this. It's very close to even. I bought it up here because this stock is, again, dependent on external forces in the market, and I don't love that. But out of all the trades today, this is the one that I'm not the happiest with, is Mara. A lot of potential always with this. It could shoot up. Still, don't love it. I also put a short on Philip Morris here, and I did not like that it closed right above the 50. In fact, I was about ready to take profit on this because it is in profit. I got the puts for $3.05, and right now they're going for around $3.30, $3.40. So thankfully I have a little cushion tomorrow. Hopefully it doesn't bounce up off this 50-day moving average, I should have closed this trade. Other than that, the rest of the trades that I have, including MOS, which I took towards the end of the day, great stock, doing another all-time high really well. The market I am slightly bullish on, but again, like I said, anybody who tells you where they think this market is going is essentially telling you they think they know what's going to happen with Ukraine and inflation and everything else. Basically, they're full of shit. They don't know. So the best thing you can do is either A, trade stocks like DVN or TSM like I showed you. I say B, you could sit out and then resist the FOMO. Right? You could do that. C, you can trade stocks that have some risk to them, like Nvidia or Crowd, and they're in a good direction. They have relative strength, but that sector can immediately flip. And in that case, just make sure you're hedged. I like to use VIX calls. I like VIX calls. I like that they're not a direct corollary. I like that I can have my other plays doing well while VIX is not exactly dropping. So I like them better than SPY puts. Let's put it that way. Okay. Well, there we have it. Hopefully a shorter video, but tomorrow we'll see. Very big tomorrow night, State of the Union, and then we have Powell, who maybe we can get back to blaming again, coming up later on in the week. A lot of volatility, so when you have that, the best way to prepare yourself, watch some more of these videos, read the damn Wiki, and have yourself a good night.